Michael Vandergrift, MCV Realty Group.
Just to help our team grow and help our clients so much better, in this, Hello, everyone. Michael Vandergrift, Darrell Watson here with
Good morning.
MCV Realty on Black Friday. We're here in the office working, putting in that little extra for all of our clients. And I got Darrell in here to put him on the hot seat because we want to make sure he's not anymore a secret lender.
Absolutely not.
And he recently switched over to Geneva as his direct financing company. And so we're going to ask him first, Darrell, what is Geneva?
Geneva Finance is a direct lender who works with many investors on Wall Street as well as Fannie and Freddie Mae.
Okay, great. Now, while we always tell our clients you can choose whichever lender you want, we always recommend Darrell is one of our top lenders. He can do some amazing things. He's done some amazing things for clients. And, I'm going to ask you, Darrell, why should people choose you?
Well, I've got over 20 years experience, and I've also got the strength of Geneva Financial backing me, who funds billions of dollars in home loans a year. We focus only on home loans. We're not a commercial lender or anything but a home lender.
Okay, so you don't do any commercial financing?
No.
Okay, no land either?
No.
Okay.
We can do construction loans. We have a full portfolio of products available. And in this ever-changing market, you really need a professional on your side to help guide you as to what product is best for you. If you're old enough and you remember what happened back in 06, 07, 08, 09, there was a lot of not so great lending programs out there available to the public that most mortgage brokers pushed on their borrowers for their benefit. Well, today it's a different market because the CFPB or Consumer Financial Protection Board has enacted some pretty strict guidelines to help protect the borrower. However, nowadays you are seeing other products hit the market besides just conventional FHA. You're beginning to see reverse mortgages. You're beginning to see adjustable rate mortgages as well. Now, while adjustable rate still has a stigma and can scare some people, it depends on your very particular situation. Myself, I bought my house 20 years ago. I opted for a fixed rate loan because this was my third home purchase. I knew I was going to be here forever. I'm not interested in moving. I'm not interested in upgrading. I'm not interested in downgrading. So a fixed rate mortgage worked best for me. Whereas some of the Gen X coming into the housing market, they are only going to stay put 3 to 5 years. Perhaps a different product may be in their best interest to reduce their overall cost and mortgage payments going in as they mature into the housing market and maybe buy their second and third home, depending on what's going on within the market at that time. Then they may want to change it up a bit, depending on their particular situation. That's why it's so important to have a professional that knows the market, knows what's available, to be able to help you choose the product that's best for your situation.
Yeah, I've learned that from just doing the real estate side, that there's so many different products out there for people. It's which one do you choose? Well, you need to talk to a lender. I always say that's outside my field, especially we've got buydowns now.
Absolutely.
3-2-1s, 2-1s.
There are a couple different kind of buy downs. You can buy down the initial rate in the beginning, okay, which is going to reduce your rate. And the ratio is not equal. So don't think if you're going to buy it down 1 point, you're getting a point in interest rate reduction. It unfortunately does not work that way. On average, it's about 0.25% rate reduction for every point. So if you're financing $300,000 and you're buying it down 2 points, that's going to reduce your rate by about 0.5%. And it's going to cost you 2% of the amount borrowed, or $6,000. Now, to figure out if that's a good investment, you've got to do some math. You've got to take the higher rate, multiply it out, okay, and see where your break-even point is for your buy down. In most cases, a buy down is definitely worth it. In working with investors and with banks of any type, there's 2 ways that banks make money, and it's in the interest rate is number 1, and it's pay me now or interest rate, pay me later. So you can prepay some of that interest up front to bring your initial rate down. Now, a 2-1 or a 3-1 buy down is a little bit different. That's where you will buy some points down, but it's going to reduce your rate down more in the first couple years, but then it's going to increase a couple times. So you need a professional to help you navigate and decide which program is going to work best for you.
Absolutely. I agree. That's from my side, more on the real estate. That's what I always tell people is it's what's right for you. That's what's right for you. You've got to investigate all the options and see what fits you the best, and the new saying, I know you know this, is marry the home, date the rate.
Exactly. Because what's going on now in the market is, people that are purchasing now, these are going to be short-term loans. They're going to refinance within the next 12 to 18 months. Of course, we don't know what's going to happen in the market. We never do. I've seen every up. I've seen every down. I've seen every which way in the market. And not pulling the trigger on your dream home now because rates have increased, you're doing a disservice to yourself because you could be missing out. Over the last 2 years, what has happened is people have paid more for homes probably than they're worth, which if you did some forensic math, that could equate to actually paying a higher interest rate because they borrowed more.
Correct.
So now that prices are coming down, interest rates have gone up. It's equaling out, and it's just a simple market correction, which happens in the real estate industry, which used to be every 3 to 5 years, 5 to 7 years. This last run has went a little bit longer.
Mm-hmm. We're on the longest bull run in history.
Absolutely.
So we're up for a down eventually because it typically does cycle every 5 to 7 years.
Yeah.
So any last things you want to leave with our viewers before we go?
Yeah, don't just stop house hunting just because rates have increased. Let's go shopping. Let's get out there. Let's find the loan that's right for you and the house that's right for you and your family.
So if you're ready to make a move, get a hold of us. Be sure to share, like, subscribe. Grace and peace.